Hi everyone, I'm Ryan Taylor with All Access Homes, and I'm here with Vince Gironda from Mortgage Works. Vince is the in our office, he's our in-house mortgage broker with LePage, and he's here with his team. They've been around for years, but he is the expert on how to help you finance your home and answer any questions you have for your kids getting the first mortgage. Vince, thanks for coming in today. I appreciate it, or at least coming into my office.
Thanks for having me.
What are the benefits of working with a mortgage broker?
There's a few. Again, mortgage broker will deal with most of all the banks. We have up to 50 lenders that we can go to. The difference between someone working at a bank and a mortgage broker is that you're going to have access to us 24/7. I've got people going to the bank waiting 2-3 days for responses because the girl is off today or not back until Monday, certain things like that. Again, we get to do all your dirty work for you, which makes it easier for you at the end of the day.
And then one thing we talked about as well is that you pull the credit rating once versus if I go to 3 different banks.
Yeah, everyone's going to have to pull their own credit check. We only do one, which will be used by all the institutions we deal with. So at least you won't get a hard hit on your credit every time you do one.
And you can shop it around to all of them in one shot versus...
Correct. And it's not always the rate. Sometimes it's all the options you get, prepayment privileges, stuff like that. It's not just we work on rate, we work on getting you an approval quicker, less stress if possible. And that's our focus. Again, we don't charge anything for our job. We get paid by the bank, the lender, so there's no fees for anybody.
So you're commission based like I am. So as a realtor, I get paid by the seller, you get paid by the lender.
Correct.
Okay. So all the work we both do is...
Yeah. So the lady at the bank or the gentleman at the bank, they get their salary at the end of the week if they do or don't do your deal. We want to get your deal done for your sake and for our sake as well.
Okay, so it's in your best interest to get the best deal for your client.
Correct.
Okay. If I don't qualify for the amount that I need to buy the home I'm looking for or the condo I'm looking for my kids, what do we do?
Well, again, if we go through the A lender and it doesn't get approved the typical way, there's B lenders, there's private lenders. We will give you options. We'll try to give you options, put it that way. The bank can only give you a yes or a no. We can do more than that.
Okay. And how much down payment do we typically need for a property?
Typically, between 5 and 10%. If it doesn't work with the CMHC and the Genworth and the Sagans of the world, we do have options as doing first and second mortgages for you privately. Payments work out to be basically the same. It's something we'd have to sit down and go over with you. But our objective is to try to give you options.
Now, can I take gifts from my family if I'm looking for I need extra 20 grand to get the house or an extra $10,000? Can I take a gift from my family to do so?
Gifts are welcome. It has to be from immediate family, parents, brother, sister, grandparents. It can't be from a cousin, can't be from a friend. So it's very important to understand that as well. Something we would discuss when we meet.
Okay. What information do I need or do people need to get their first mortgage or to get a mortgage? What do you need?
Well, if you're a salaried employee, it's easy. If you're salaried, an employment letter and a pay stub, easy. If you're hourly, we would need an employment letter, pay stub, 2 years T4s if you've been there for 2 years, just so they can see how many hours you've been thing. If you're self-employed, it gets a little bit more difficult. You need 2 years T4s, 2 years NOAs, 2 years tax returns, and your business license.
Okay. So when you say business license, so that's referring to like if I'm self-employed or?
Correct. So if you're in a corporation, self-employed, sole proprietorship.
Okay.
All depends on that.
What about first-time home buyers? What do they need or what challenges do they have to go through and should they be aware of when they're going to get their first mortgage?
Well, first-time buyer, you got to hold their hand. Let's say what it is. It's something we sit down with them, make sure they understand what they're doing, how payments are worked. A lot of people, if they're coming from rent and now they're mortgages, because rent you pay at the beginning of the month, mortgages you pay at the end of the month. So there's a lot of things that they would learn that they don't learn in school, which we would go through with them.
One of the questions we were talking with your team as well is that how do, you just got off a web conference with Benjamin Tall, who's the chief economist for CIBC Global, I think, for their finance?
For CIBC, correct.
Okay.
Yeah.
What was he saying about projections for 2024?
For 2024, right? He's actually pretty open-minded that we will see rates coming down mid 2024 with and tremendously coming down in 25, 26 for those renewals. Again, he is saying we are in a little recession, which is okay, he says.
Hey, listen, it was crazy.
It's needed because rates could not stay that low as they were, because that means house prices would be gone up, right? So you wouldn't qualify on the other part of it. But he's open that we're going to see rates dropping.
Okay. One of the slides that the guys gave me as well for is historically. I mean, rates are not that bad right now. Like my first mortgage 25 years ago was 6%.
Yeah. No, rates, I mean, I started about 30 years ago. Rates were in the 7s. Again, the amortization makes a difference as for the payment. If they can do something with amortization, it'd be a lot more affordable for people to,
yeah.
Right now, it's a little bit because of the 25-year and the 30-year AMs that makes the payment a little higher than usual. But historically, the rate is low.
And I think it's important that I want to mention this because I deal with this as well, is that when people are going from, a 25 to 35-year amortization period, what is the deposit they have to have?
The first $500,000, if you're a first-time home buyer, even if you're not a first-time home buyer, anybody can be a 5% down deal.
Mm-hmm.
For 5% of the first 500, 10% of the next 500, anything over $1 million, you have to put 20% down.
Okay. But if it's under $1 million and I have 20%, I don't have to pay the CMHC fee.
Correct.
But I will automatically over $1 million regardless.
Regardless.
Okay.
No CMHC over $1 million.
Really?
No.
I don't know everything. One of the things I remember is like we're similar vintage. I'm a little younger. But I remember like my parents' mortgage when I was, I think, 8 years old was 14%. So I'm bringing that up because everyone now is thinking, we've been blessed with 2% mortgages, 3% mortgages for years. The rates historically are not that bad right now.
Yeah, I mean, when they were 14%, I mean, the houses weren't as expensive, but at the same time, they weren't making the money people are making today.
So you can get a hold of Vince here. You can call Mortgage Works, talk to one of his staff, and Vince will happily help you guys out, help you get a mortgage, give you all the advice you're looking for. It's more a relationship with Vince, and that's what I'm trying to show here, is that he's here to help you. He's here to give you the advice you need so that you can either refinance the property you're on, help your kids get their first property, whatever it takes to deal with mortgage financing. This is the guy to go to and his team, which are right here in my office in Oakville with Roy LePage. If anyone has any questions regarding mortgage finance, how to refinance your property, how to help your kids get their first mortgage, whatever it be, get a hold of Vince at Mortgage Works or one of his staff. And QR code's right here. Call my office, Roy LePage, in Oakville at Oak Park, and we'll get you in touch with Vince. And Vince, thank you.
Thank you.